Okay, good morning. It is Monday. It is Monday, 8:30. Today is the what? What's today's date? No clue anymore. Just know it's a Monday, the 15th. So one thing to keep in mind regarding the Middle East is we only get a shakeup in the markets if the markets fear it is not contained. Um, just a quick backdrop on this. Israel attacked Iran's embassy. They bombed it. And if you're familiar with political decorum, generally embassies are off limits. So I believe Israel tried to say Hamas was there. Iran was like, bullshit. Excuse my language if there are kids watching. Um, but, we're going to retaliate. And what was unprecedented about the attack was that the Iranian military themselves launched, I believe, over 100 missiles or something at the Israelis. But, the Israelis have the Iron Dome system. They have the U.S. military technology uses, at their disposal. They have their own technology at their disposal. So you have two of some of the wealthiest nations in the world going up against one nation who has been levied with sanctions galore. Shortly after their attack, meaning Iran, they gave word that they are not interested in escalating this further, but, they just wanted to send a message about you're not bombing our embassies or our embassy anymore. And, we're not going to take that laying down. So this is why the U.S., has shared with Israel, if you guys decide to retaliate, you're on your own. They can't afford to get in the middle of that type of escalation. I'm pretty sure Israel was condemned behind the scenes for bombing an embassy. And yeah, so that's what rattled the markets over the weekend. And then we have, so just remember with Middle East conflicts, mainly when it's Israel against whoever in the Middle East, as long as this doesn't fall out of containment, because Iran would have been pretty integral. This would have been like really big because of the maritime routes, the shipping routes that go through Iran, and how much of global economy that represents, as well as obviously with oil. So that's that. And then the spot Bitcoin ETF approvals, spot Bitcoin and Ethereum ETF approvals in Hong Kong. So keep in mind that Ethereum is deflationary. So those of you who are watching, if you're part of the community, you already know this, but Ethereum is deflationary. So really what stood out to me about this approval for the ETF is the method in which the redemption and creation are done. So essentially, they're going to be doing in-kind redemptions and in-kind creations, which you can research this yourselves. Blackrock, Fidelity, Van Eck, they don't do those. They're more on the cash side of the redemption. But the benefit of doing an in-kind redemption and in-kind creation is for the tax benefits. So that's really it. Helps minimize the potential for capital gains, and that's big though, and it's very efficient in that regards. So we'll see how the other ETFs respond. Maybe BlackRock and Fidelity change up how things are done, but that's really the big thing with these ETFs here. And I just want to throw this out there. These ETFs don't need to literally have, if they have, say, because I think BlackRock has about 420 million shares, ETF shares. They're not going to have 420 million Bitcoin, guys. So let's just keep that in mind. They do need to have a certain amount of Bitcoins, but that's essentially why these are called IOUs. And obviously, it's all operating under good faith. Not saying this won't drive demand, not saying they won't have any Bitcoin, because they do have Bitcoin, but they're not going to have as many as the shares that they supply. It's not how these ETFs work. And so, again, they just need to have a certain amount. That certain amount is dependent on how it's all structured. All right, so let's move to the markets. Here's our heat map. Everything's green. Everything's recovering from the scare over the weekend. So let's take a further look. So the total, so the overall crypto market cap obviously dipped. We dipped down to what? 2 trillion. We dipped down to 2 trillion. So really what I'm looking for is us getting above 2.5 trillion. Or I should say, let's see, 2.48 trillion in market cap, and then holding that to remain bullish, especially in the near term for this rally. We stay under this line here, this 20 moving average, then optimistically cautious. That's what I would say. Same thing goes for the altcoin market. So it looks like the altcoins here almost wicked down to the 200 on the daily. So 559 million. Look at that. To go from look how quick altcoins can fall, and this is why it's so important to have limit orders in crypto, because you could be asleep. You don't even need to be asleep. You just could be out, and something happens. You don't know, but if you don't have a limit order at predefined support and resistance levels, then you can miss out on this. It literally went from 700 to 500. I mean, 200 billion within 2 days. And that's it. Look how quick it drops, and then look how quick it recovers. So they're about to recover. The altcoin market's about to recover what was lost. But from a technical perspective, we're still below the 20. So as long as we stay below this line, I am optimistically cautious about moving forward, but you need to have your predefined entry levels for accumulation. This is why it's important, whether it's a centralized exchange or decentralized exchange, to have limit orders. Limit orders. All right, so now with Bitcoin, same boat. We're getting close to the halving. The halving is the 19th. So we are a few days away, 4 days away to be exact from that. And we'll see if my theory pans out. I'm expecting at least a 22% drop based off historical data. It's kind of like a rough range. And we trade sideways for 138 days before moving up. So wherever the price is at, I'm expecting at least a 22% drop. If we move lower and we're at, the 50 mark, or we're here, and then we drop an extra 22, that would be pretty something here. But I'm not going to get into these what ifs. Just right now, I would say it's below the 20. So just like with the altcoin market and the overall crypto market, optimistically cautious about the next move up with Bitcoin. I would just be focusing on placing limit orders and acquiring as they hit. Same thing for Ethereum as well. Under 3,300, we are optimistically cautious about any type of run, any type of move up. Until this holds and confirms, then we start to set the stage to go higher. So just keep that in mind. All right, so S&P 500 is not open yet, but the S&P is the same way, guys. Remember, we're below the 20, and this is even more important on a more mature space like equities, like securities. These technical levels, dropping below this, holding below this. If we can't get above this, then looking at the downtrend and looking at us rolling over more and more and more and more. Until we start to get to certain levels. So 4,800 would be like the level if we really started to roll over, essentially this fib level right here. But I'm keeping watch on this. I'm keeping watch. It's very important. Again, yeah, like I said in another video, seeing how we end this month. If we end this month with this red, and this is reflecting a bearish engulfing candle, then I have no confidence about the next moves up. it kind of, it will repeat itself. We did a similar move here. We finished the month red, engulfing. And then what did we do? We moved lower before moving back up. So this is exactly what it can do. It'll move lower before moving back up. So just keep watching that. Same thing for the NASDAQ. This has a little more of a candle to engulf, a little less, I should say, body to engulf. So if this is really as obvious, then we will definitely roll over. All right, so the VIX, man, the VIX did exactly what we expected it to do, and then it did more. So right now the VIX is at 16. It spiked all the way up to 19. I was watching it, and now we're going to just wait and see. We're going to see how this holds. See how it holds over at 1518. So I'm expecting it to hold around the 1518, 1504 range. But as long as we continue to hold this, then that means the tide's turning, and the markets are expecting to be a little more volatile moving forward. The ETFs. So here we go. Post-market, got some extended hours trading data on here, and we wicked right down to this wedge. So let's see how we trade in between here. Let's see how we trade in between this wedge, and then do we shoot down or do we shoot up once we break out of it? We'll see. We'll see. We're getting close, but it hit right on the money. Look at that. That was like that was a hole in one right there. So this is the power of TA and just being confident in price action. All right, so lastly, let's go over some technical analysis. The banks are making bank. Goldman Sachs crushed it. Crushed earnings, crushed everything. They're up pre-market at 405. Let's take a look here. Yeah, they shot up. I mean, this is a thickly traded stock. This is kind of like something you swing trade. I would never day trade this just because it's so many shares. The float is so high. I'll be specific. The float has a huge float. Usually these large caps do, but they had good earnings. I'm only bringing this up because they had good earnings. If we do get a pullback, I would say 396 and 373 as well. Those could be good levels. You do have a gap to fill here at 362. So that's that. Schwab is another one, had good earnings. It is down pre-market, but still did well. And let's see here for Schwab, the floor is 67.49. Looks like here on a daily, but it'll be below the 20. So I'd be cautious about taking a position on this. Panning out. See what this looks like here. So Schwab, so if Schwab ever gets above 93, then you got like what is called a blue sky setup, meaning it can go up much higher. But let's see, 79, 73, 67 would be an accumulation level. 67, 66, and then inflection looks to be like 63. So yeah, 63. But moving on to the banks, M&T is another one, had great earnings. They're up pre-market, so be careful on trying to short. You know what I mean? There. It is hitting this 20, which is a pretty important level. But see what the price action looks like on this. Yeah. So the banks made bank. Lastly, we'll round it off with looking at two cryptos. Let me get rid of this fib level here. Solana. So Solana rolled over. This is the importance, though, of limit orders. It went all the way down the 119, which is a good technical support and resistance level. So that's really good on Solana. If you had a limit order there, you made a great buy and you're already up. You're already up $30. So which is amazing. One thing about Solana is that from a trading aspect, when it moves, it moves. It's a really good tradable token out there. But right now, from a TA perspective, seeing how it holds over 168 and then going from there. If it holds over 168, then we'll see what's what. And then lastly, Litecoin. Litecoin is below inflection. Let me get rid of this fib level here. So really, Litecoin is bearish in my opinion at the moment, but it has sold off considerably. So that shakeup over the weekend sent it to extreme sell-off levels. So now it is pumping up, and I think it has a little more room to run. Maybe an extra $10 in it, or an extra almost $18. Maybe retest the inflection point. Like I said, if it gets above 98, then that is definitely bullish. If we are below 98, then optimistically cautious from a day trade perspective. If you're looking to accumulate, now would be your opportune time to consider that and look at it. So that is the markets for Monday. It's not really a lot happening this week. I'm pretty sure one of the Fed speakers will talk about any of this economic data that comes out today. And then throughout the week, I know we got some housing data that's going to come out and whatnot. But this is really a week that isn't anything on the docket in terms of macro data. Only thing happening this week is the halving. So that'll be the big news coming up. But yeah, like I said, guys, let's see if anything has happened. Business. We don't care about Trump. At least not on this segment of Market Pulse. Anything about U.S. retail sales? Okay, so nothing really out there about the retail sales. I'm pretty sure if it is bad enough, or if it is strong enough, strong or good, then dollar rally supercharged, fragment of Europe, Germany, Fed hike spur. Let's see. Let's just do this. Fed speakers. List of speakers today. Federal Reserve. All right. So Fed. So Fed Williams, I believe, is the guy that's talking today. All right. Let's see. U.S. retail. Let's do U.S. retail. Market watch. There we go. Retail sales rise sharply. Could boost U.S. GDP in the first quarter. So here we go. This is like clockwork, guys. Any of these Fed speakers, who has been Bostic? Bostic's been the bearish one out of all of them. But if anyone's talking, do not be surprised if you hear about the monetary policy is not restrictive enough, or things like that. Yeah, like the markets aren't really taking inflation seriously or anything like that. U.S. retail sales beat expectations. So here we go. Yeah, it was just on Reuters. I couldn't find that. Anyway, yeah. So expect more restrictive policy talk. That's basically what the Fed's going to be echoing. One of the Fed members are going to be talking about our monetary policy is not restrictive enough. So that's that. I will see you guys later. Have a good Monday.